Good morning, everyone. Good morning. It is exactly 10 a.m., October 6, 2025. It is so good to see you all this beautiful Monday morning here in Austin, Texas. Thank you all so very much for joining our Monday morning touch point. This is where we update and go over the single best leading market indicator available in the entire area. Let us see what's going on with the Austin market. We've been talking a lot about the Austin market, especially with what happened in the month of September. As you know, we had a really good August. Every single day in the month of August, we had positive pendings. Pendings were outperforming last year. And that went into the first week of September. And then all of a sudden, everything reversed. And now we've been experiencing negative pendings year over year in the area, which is really fascinating that it happened so quickly. We're going to take a look at that. We're going to take a look at inventory. We're going to take a look at the economic calendar to see exactly what is going on this week and how it may affect the bond market. You can see behind me, hopefully you can see it, that we are up only 1.9 basis points on the 10-year Treasury. It wasn't the best morning in the world. Thankfully, we've had a little bit of a pullback in the yield here so far this morning. It's going to be a mild week when it comes to U.S. Treasuries and mortgage-backed securities. We do have a few economic indicators that will absolutely affect the bond market, affect the mortgage-backed security market. 2 weeks from now, way more than this week, but we are still experiencing a government shutdown. We have no idea how long it will take for the government to officially reopen. So far, it is not impacting the bond market as much as people were expecting and predicting, and that's going to be a good thing. But rates did go up a little bit. We're at 6.625 right now. We were at 6.5 for most of last week. We're also going to take a look at that. Let's go ahead and get started by looking at the new listen to pending ratio. As you know, first thing that we have to do to make sure that we've got all the accurate data is to go back in times a little bit and update the previous few weeks. We're going to start by looking at September 22nd all the way through September 29th to see what we have to update. Keep in mind that this resource is going to be focused in the 6-county area: Travis, Williamson, Bastrop, Burnett, Caldwell, along with Hayes County. And we're going to go from the 22nd all the way to 29th. We're going to click on active under contract. This number is going to go from 509 to 510. And then we're going to take a look at pending. And this number is going to go from 320 to 326. Let us go 1 week. Before that, it's going to be the 15th to the 22nd. This is going to be 422, 422. Let's go from the 8th to the 15th. That's going to be 438. That doesn't change. Let me just do 2 more weeks to make sure everything is perfect. That does not change. I'm going to do 1 more week from the 25th all the way through the 1st, and that's going to be 458. Great. That does not change. So that's all really good. Now, let's go ahead and start updating this past week from the 29th all the way to the 6th. Keep in mind that the information will be updated. New price increase, price drop back on the market. All of this is going to lock in whenever we change over from 11:59 p.m. tonight to midnight. Those numbers do not change. Active under contract is going to change a little bit. And then pendings are going to change over the next few weeks simply because agents are allowed to go backwards in time and update the status of transaction to pending. On new listings, whoa, is this right? 929 to 106. Is this right? Okay, well, this is interesting. 929. 929 new listings. We're at 886 the week before that. And this is ACL, which is really interesting because we usually see a pullback during ACL. I'm going to go ahead and just take a look at the week or the year over year. So we're only down by 87 year over year. We could very well be positive year over year on new listings when this is all said and done, or we're going to get very close to a positive on new listings. Now let's take a look at price increase. And that goes up. That goes up to 192 from 110. So that number also goes up. 192 price increases. I'm going to submit to you that 90% of those are going to be new construction. Towards the end of the month, builders do tend on doing price increases as a marketing strategy. Not a fan of that marketing strategy, but we do see that happening. Let's take a look at price decreases. Well, this number goes down by quite a bit. 1790. So that percentage is now 90%, way less than the previous week at 95%, a little bit higher than 2 weeks ago at 87%. But it's interesting to see a bump up on the new listing count and then a drop on price decrease. Let us hope that this translates towards more properties going under contract and a little bit of a healthier pending market. Let's go to back on the market. We are at 208 back on the market. Well, that number goes up 22% back on the market. That's going to match the previous week, 21% 2 weeks ago. And then we had a 20%, which matched back in August 4th. The lower the back on the market, usually the worse the market. The lower the back on the market, the worse the market. The higher back on the market, that's a leading indicator of a slightly improving market. But when you look at the average going all the way back to the beginning of the year, we are looking at an average of 19. We're at 22%. Not that big of a difference, but it is interesting to see. We've got 2 weeks in a row at 22% back on the market. Let's take a look at active under contract. We are, all right, not the worst number, 365. Not the best, but certainly not the worst. We had 510 a week ago. We're at 365 here so far. Keep in mind, 90% of this number is going to be locked in by 11:59 p.m. tonight, and then it's going to go up a little bit over the next 2 weeks. We don't see as much movement in the active under contract as we do in the pending. And now this is where you get to guess. This is where we need 5 guesses on how many pendings over the past 6.5-ish days. How many pendings? Last week we had 326. Melanie Price is starting us off at 222, followed by Harold at 240. Renee is coming in at a very bearish 189. Very bearish. Let's keep on going. We've got 3 down and 2 to go. Let's go ahead and get 2 more guesses going. We've got Manira at 201. We've got 4 down, 1 to go. I just need 1 more person to go ahead and just type a number, and I will read it out loud, and then I'm going to click on the checkbox and see what that number comes out to. Go ahead. We've got 4 down, 1 to go. We've got Anibal at 220, and that's going to be our 5. Let me go ahead and click on it. We have, it starts with the 2. It then goes with the 2, and then we are at 227. 227 pending. A little bit better than most of us expected. Not great. Not horrific. It doesn't have a 1 in front of it, so I'm fairly encouraged with that. It is going to start us off at a 0.52 ratio. Now, where do you think we're going to fall in the next few weeks? I'd say we're going to fall slightly south of 0.78, closer to the 0.73 to 0.75. That will still put us in that neutral to substantial increase in inventory, or tangible. Let me correct myself here. Tangible increase in inventory. That puts us in the cold neutral market. That means that out of 100 properties entering the market, 73 properties are being absorbed by the market. That's what this ratio tells us. So right now, we're at a 0.52 for the past 6 days, meaning out of 100 new listings that entered the market, only 52 properties or listings were absorbed by the market. Of course, we know that it's not out of the 100 that came in. It's just comparing what came in, what came out. Are we increasing in inventory over time, or are we expecting a decrease in inventory over time? And as of now, at a 0.52 ratio, it is going to put a little bit of pressure on the market with a heightened listing environment. Let's go ahead and take a look at what's going on year over year on the weekly. And there are a few items here that are a little bit on the concerning side of things. So let's talk about the good news. The good news is that we are now at the 4th week in a row where we've got less new listings entering the market compared to last year. And that is good. Imagine if we were double-digit increase on new listings entering the market. We'd have even more inventory. So that's the good news. We've got 8.7% lower, a drop on new listings entering the market. This is back on the first week of September. And then we go 4.2, 6.5. And right now we're down 8.6. We're going to be 87. Do you think we're going to get 87 new listings hit the market between now and 11:59 p.m. tonight? I don't think we will. I think we're going to be negative in the teens, maybe 10 to 15 or so negative listings. So we're going to be negative 2%. That's where we are, negative 2%. So that's the good news. Good news, we've got a little bit of retreat on the available inventory entering the market. On the pricing side of things, we were up on price increase. Now we're down year over year on price increases. We are up quite a bit on price drops. So that's going to show us a weakening market. We are flat on back on the market. The concerning part is going to be this number right here. We now have the 4th week in a row where we are negative on the absorption side of the market. What we want to see is we want to see this number beat out this number. If we have negative 8.7% in new listings entering the market, we want this number on the pending to be better than that. We want it to be something on the positive side of negative 8.7, because if it's negative 5, okay, we're still negative, but it's not as bad as the negative new listing. We are now noticing the other way around. So even though new listings are dropping, pendings are dropping even more. And that's concerning, because it's a slowdown in new activity entering the market, which we welcome. I don't want to see an additional 2,000 listings in the market right now, but the demand is slowing down even more. And we are noticing not only is it slowing down more, but it's accelerating. We went from negative 2.7, then 5.2, 10.2, 10.9. And for 2 weeks ago, we're negative 19.1. That's going to improve, but it's going to settle somewhere around the 14% negative year over year, which is why the ratio is lower. So that is why I am obsessed with this ratio. Because if you were to only focus on this headline and you were to say something like, listings are down by 1,600 over the past 3 months. Accurate figure. Months of inventory, no longer at 6 months inventory, now at whatever, 5.47. Accurate figure. But why is that happening? Is it because demand is increasing? No, not at all. Demand is not increasing right now. So that's why we have to be obsessed with the ratio. Yes, inventory is going down. Yes, active listings going down. Months of inventory is going down, not because people are absorbing more of that product, because less people are bringing that new product to market, more so because of the seasonality of real estate. We are also noticing a record high number of quits. These are sellers that are quitting the market, either through expired or through withdrawn. So the decrease in available inventory is not happening because of an increase in demand. It's happening because of quits. It's happening because we have less people entering the market right now. Now, and then yet we've got a record number of new lease listings entering the market. What I think is happening is that people are making the same decision that they made back in 2023, 24, and now into 2025, which is things are going to improve next year. Therefore, take it off the market, relist it in the spring, or put it up for lease. We'll try it again next year. That is the decision that people are making. We're noticing the data pointing to that. That's what's happening right now in the market. Is it the right decision? This is where we have to separate the macro from the micro. At the macro level, absolutely not. It's not the right decision. We are noticing pricing going down. We're going to have more competition in the first quarter of next year. At the micro level, now it becomes property specific. Is it the right call for that property, for that zip code, that subdivision? It could very well be the case. That's where it requires more of a longer conversation with the seller, discussing their goals, discussing their exit strategy, discussing what ifs. What if this time next year, just like it happened this year, we are down year over year? Like, what's the strategy then? What if the property stays vacant on the market, on the lease market for 30, 60, 90 days? Are you good absorbing that cost for that PITI without getting that rental income? For some clients, the right decision could very well be wait for the spring, wait a few years. For other clients, and we can look at specific zip codes that are crashing, and we can say with a high degree of confidence, your best time to sell this property is right now. You have to do it right now. This is what we're experiencing. This is the activity index for your zip code, for your neighborhood. Prices are going down. And that's really important, just to be able to analyze the data, have that conversation with the client. Super important. As a matter of fact, someone reached out to me asking for a valuation analysis on their specific property. This is in the 78744 zip code. So I pulled up our data and analysis. I ran a really quick market report, ran an appreciation on that zip code. And even though that zip code, 25-ish or so activity index, pending divided by active plus pending, that's decent. That's a neutral market. 4.5 months of inventory, not bad, fairly decent. When you look at that property, when you look at that specific subdivision, you've got 8 active, 0 pending, 12 sold over the past 120 days. And you look at the pricing within that specific product, it was, let's put it this way. They bought it 2021 for about $440,000. I put the price of that property at nothing more than $320, realistically $315. If they want to move the property, not move faster, they want to move at all for the highest possible price right now for a perfect listing, perfect marketing, it's $315 to $320. Nothing is pending. When you look at the activity index within that price range, within that zip code, there's a 0 with a red. Nothing is pending because you can just go down the street and you can buy yourself a property at 2.99%. It's not going to happen. It's like, we can list it for $315, and that's a $130,000 price drop, which is massive. That's a 30% price drop in 4 years. And I believe with all my heart that that's the best it's going to get for the next 2 to 3 years for that specific zip code. So rely on the data. I responded. I don't know that I'm going to hear back. I don't know what the situation of that person is. We'll just wait and see. But you've got to rely on the data. But I know that this is what's happening. People are pulling their homes off the market. I then see those properties hit the lease market. We're just going to wait and see how things play out. I do foresee a fairly big increase in inventory. First quarter of next year, people putting their homes back on the market. So I am a big fan right now. Anyone that has a listing agreement that's going to expire towards the end of December, my recommendation, write out the market, let it expire, do a listing refresh, relist at January 10th, come in early, come in strong, come in realistic on the pricing. But I do recommend price it right and stay on the market. Competition goes down between right now, October 6th, all the way to December 31st. 18 out of the past 20 years, 23 out of the past 25 years, December outperformed November because you've got less inventory to compete with. That's my recommendation. That's personally what I would do if I had a seller asking the question, do I take it off the market right now? No, right out the market. People are not as concerned with days on the market. No one's looking at a property with 78 days on the market saying, what's wrong with this property? They might be saying, is the seller motivated? But they're not saying what's wrong with this property. A lot of properties right now have a record high days on the market. The entire state of Texas has the highest days of the market since 2016. This is happening across the board, and it's certainly happening in our area. Let's go ahead and take a look at the monthly. We're going to go backwards in time a little bit. We're going to go month of September and just simply take a look at the pendings. This is going to be 1472. Let's take a look at active under contract. We're going to be at 15 or 1754. And that's going to put September at a 0.75 ratio. Let's go ahead and start updating October. Only 6 days into October, so we do expect the ratio to be lower. Let's go ahead and be faithful to the data. Update everything. We're at 714 new listing, 161 price increase. We're at 1259 price drop, 89%. That's going to be the best reading going all the way back to March. October last year, 91%. So we're at 89%. That's not bad. That number going down is something that we want to see. Let's take a look at back on the market. We're at 152, 21%. Right in line. If you look at the average going all the way back, 19%, 21% is not bad. We've got active under contract, 238. And let's take a look at pending. Oh, what do y'all think it is? You see, when we do the monthly, we're not overlapping the weekends. Melanie Price coming in at 189. Sonia's like 44. Oh my goodness, Sonia. If it was 44, Sonia, you'd see me on the corner of, Burnett and Anderson with one of those twirly signs. Yikes. Okay, 144. I was like, wow, 44 is like, all right, y'all. Let's take a look at this number. 115. Y'all, 115 pendings in the first 6 days of October. Yikes. We got 353 total properties under contract in the first 6 days of the month. I mean, I know it's only 6 days, but man, this number has to go up. That's a little bit of a shocking number right there. I can't say that I'm super encouraged with seeing this number, 115. Wow, I'm just having a hard time processing just how low of a number that is. Closed so far this month, 211. And watch the withdrawn be higher than the pending. As a matter of fact, let's do a yes and no poll. Do you think the withdrawn is going to be higher than the pending? These are withdrawn, right? Most people don't withdraw at the beginning of the month. They usually withdraw towards the later part of the month. Do you think that the withdrawns are higher? So Melanie's going to start us off, yes. What about, let's get a few more people here. Okay, Renee's saying no. Not expireds, just withdrawn. I don't expect there to be a lot of expireds anyway because it's only 6 days into the month. They could have shortened their listing agreement. Okay, we've got Renee no, Sonia no, Harold no. We've got Monica no. All right, let's go ahead and click on this. Let's see who's going to be right. Either Melanie is going to take the jackpot or you all are going to be right and Melanie's going to be like, wah, wah, wah. Oh, Melanie Price. Y'all, 177 withdrawns. All right, good to go, Melanie. Way to go. You take it. You won the jackpot. Not only is it more, but y'all, it's insane. 177 versus 115. What is that? 62? 62 more. What do I win? Bragging rights, Melanie. Next team meeting, I will hand you the mic and you can shame everyone. That is what you have the right to do, and you've earned it. You've earned the ability to shame people and yell at them. You can just yell. She deserves it. But it makes sense. I have to keep talking my clients off the ledge. Boy, isn't that right, Sonia? You're absolutely right. And this is the thing. Without even pulling the data, this confirms the conversations that I'm having with you all, what I'm looking in the lease market, is that the reason why that we are noticing the number of active properties going down and then less new listings entering the market. We're noticing an increase in that withdrawn, an increase in that expired. Let's take a look at expired. Expired, wow, 98 expired. Even expired are fairly high. We shouldn't be seeing a 98 expired on October 6th. Usually expireds are going to be at the end of the month, and yet we've got a 98 expired. That's a fairly high number. Over the past 12 months, we are at 16,269 properties have quit the market, withdrawn, and expired. Now, keep in mind, it could be one property could expire and or withdraw 3 times. So it doesn't mean that we have 16,269 instances of withdrawns and expired. Someone could list their property in November, withdraw it in December, list it in January, expire in May, list it in May, withdraw in July, list it in July, and then now withdraw in October. That could very well happen to certain properties, but still a very large number right there. Really interesting to see such a high number. And yet, on the leasing side of things, we are noticing an increase in properties for lease, more listings coming on the market for lease, more inventory for lease, which that in and of itself is putting more pressure within the leasing market. All this information is updated. You can find all this, of course, on Insight In Statistics. We're not going to take a look at all the graphs. It's only the 6th of the month. Next week, we're going to have way more accurate data. My hope is that we are going to see more pending transactions and that this ratio will go up. October historically tends to pull back a little bit. We had a little bit of a pullback October 2024. And then we had an increase 2 years before that. Of course, this one had an increase. This one had a pullback. So overall, a little bit on the disappointing side of things to see only 115 properties going pending. My hope is all the agents are super busy at ACL and they're like Monday morning or Tuesday morning, they're like, oh my goodness, I completely forgot to change my property to pending. We went under contract on Wednesday. That would be great. We could very well see a little bit of an increase right there, but starting first 6 days of the month, that's a tough number right there. And then a really high number of withdrawn properties. Let me go ahead and save this, close this out, and then we're going to take a look at a few other things. We do have a Zoom user that unmuted themselves. I don't know if you have a question. You can also type it over chat, and I'd be happy to answer your question. Any questions? Questions, comments, concerns? Y'all noticing that? Noticing the same thing out there? I want to remind you all of this market update. Scroll down market update. We've got the data and analysis and the weekly market update. Under data and analysis, you've got all your cities, you've got your zip codes. Take advantage of this data. Here's the 78744 zip code, and you can see that we were able to use this information to give that market valuation to the client. There's that 25%. There's that 4.4. Look at the median days on the market in that zip code. 81 median days on the market. Activity index going down. And here's the interesting, you don't see this often. This is worth pointing out. We've got a really unique thing. Activity index going down, months of inventory going down. Why is that? That's not supposed to happen, is it? You're supposed to see a drop in activity index and an increase in months of inventory. So why is it that we're noticing parallel lines on months of inventory and activity index? W&E, that's exactly it, withdrawns and expireds. That is what's happening. So when you see inventory going down, you have to analyze, why is this happening? What is going on with this specific zip code that would cause inventory to go down? Do you all know how to pull up withdrawns and expireds at the zip code level? Do y'all know how to do that, where you can go in and just see, okay, at the zip code level, how many withdrawns and expires? Okay, good stuff. We've got people saying yes. Y'all, before you go to that listing presentation, you've got to analyze that market. Just take some time, analyze the market, analyze everything about the market. Super, super important for you to do that. We do have one person saying, hey, please go ahead and show me that information. I'm happy to do that really quick. Here's the MLS. When you go to search and you go down to property history, what you can do is you can just go to zip code 78744 residential, and you can just see from the 1st all the way to the 31st, how many withdrawns, how many expireds, and then you can go back and you can take a look at pretty much anything. You can see 20 in this zip code. And 20 might not seem like a lot. It is a lot. That means that 10% of the market, almost 10% of the available market left the market last month. So you had 10% drop in inventory in a 1 month period. What's going to happen then? Well, you're going to have a drop in months of inventory, because months of inventory, what are we doing? We're dividing the active by the average of what's sold over the past 30 days or 90 days, right? Average 30 days sold using a 90-day chunk of time. And let's go ahead and take a look at August really quick. We've got 22. So there's August 22. And let's take a look at July. What do we have? 18. So we got 18, 20, 22. That's going to be an average of what? 20 per month. And then let's take a look at sold. And we've got 45 sold. That was back in July. Let's take a look at September. September, 52. 52 in September. So fairly decent sold. That's why we're getting that months of inventory at 4.5, 36. That was a drop in the month of August. Now, really good feature on the MLS. You just go to search, you go to property history. Now, when you go to stats and you go to residential and then you go to 78744 and you click on customize, you can customize the time frame. And then we do have, I believe we do have a expired, number of expired right here. And let's go by month. So you can pull up the number of expired right here. That's another way to use this information. I found this to be less reliable than the property history. And I have reached out years ago and they're like, well, it is what it is. It's like, if the property expires by accident, whatever. And I'm like, well, just how do you get this information? This is not what's showing up on the actual MLS. So I tend not to trust this information as much as going to the actual property history. That's why I didn't show you this information up front, this drop-down menu. There are some stats here within this drop-down menu that would just work really, really well. But the expired, it's not something that I trust. I would much rather actually go to property history, or you can even go to residential search. You can just go right here, 78744. Takes a little bit longer time, but you can simply say, okay, what's the actual real number of expired? And then you can copy that date, put it on withdrawn, and here's that 42. The nice thing about this one is that you can just see out of the 19 properties, you've got 12 out of the 19 are withdrawn. They were removed from the market. So we are seeing that increased number of quits, which is why we saw that drop right here, which is why months of inventory is dropping. even though the activity index is dropping. The activity index is dropping in relation to the available inventory. Pendings are actually down by even more, but because the number of quits are going up by so much, available inventory is also down. So it's not down in inventory because absorption is increasing. It's down in inventory because of increase in quits. That is what's happening. I want to remind you all that you keep on scrolling down. You've got the number of properties available per price range, per square footage, and you've got the activity index. And take a look at the activity index, 450 to 550. Even though it's 20% for that entire price range, you've got entire segments of that submarket that are zero, no activity whatsoever. So if I've got a property at 2,000 to 2,150, that's not bad, 50% activity index. But if I've got a smaller property, a larger property, I'm in trouble. Now I've got to price that property accordingly. So really important for you to rely on this information. Then you've got the average days on the market per price range, per square footage, and then you've got the months of inventory. Look at that, 23 to 2,400, 21 months of inventory within that price range. And then you bring it down one level between 350 and 450, you've got 1 month of inventory. So let me ask you this. What do these people have to do right here? If you are an agent and you've got access to this information, what do you have to do right there? You've got 450 and above, 21 months of inventory, 350 to 450, 1 month of inventory. Now, I'll say this. Unfortunately, most agents don't have access to this, but if I'm the listing agent of this property, what do I have to do? I have to sit down with my client, and what do I have to tell them? We have to go under. We have to be under 450. That market is moving. You go to the 450 to 500, it's the kiss of death. You've got 21 months of inventory. We've got to be in the market that has what? We've got to be in the market that has 1 month of inventory, not 21 months of inventory. That is why we segment the data this way. And then, of course, we've got the appreciation, and you can see right here a few things that are really noteworthy. Can you show us 3-1? Yeah, happy to do that here really quick. We've got 3 years in a row where the median price is going down, but then take a look at this. What's happening over the past 12 months? Over the past 12 months, even though sales are very steady, you've got 52 September 2025, you've got 53 October 2024. So the number of sales are steady. This is going to be this line. That's pretty steady. But when you look at pricing, what's happening? Trending down. So there's that example of that bottom 35th percentile outperforming the other price points, which is why that bottom 25th percentile of the entire market, more so even the bottom 10th percentile of the market, is down by so much. And you can go take a look at the meeting notes from the meeting on Friday where we discussed this in great detail, what's happening with the bottom end of the market. Let's take a look really quick on the 78731 zip code. Let me pull this up, make this a little bit bigger so that you all can see. And what do we have here? We've got a fairly stabilized activity index going all the way back to May in an increase in inventory. So it doesn't look like we're seeing as many quits within the 78731 zip code. We've got only 33 pending properties, 135 active. That's really interesting. Average days on the market is exploding. 89 average days on the market, even though the median's at 56 days on the market. Let's keep on looking. We've got... this is all over the place. Really interesting to see just entire segments with no activity whatsoever. Let's take a look at pricing really quick. And we've got 2 years of gains in the 78731. Very desirable zip code, extremely desirable zip code. And this zip code overall is doing fairly well. 2% increase 2023 to 24, and then a 3% on the median 2025. We are noticing the trend line on sales going down, and then we've got a flat trend line on activity. But as far as sales, this trend line is going down. We've got 2 months under $1 million. If we see a third month over $1 million, then this number right here is going to drop from 1.1 closer to the 1,050,000. And then we could very well wipe away the 3% gain that we've seen this year, and we could end the year at a negative. We now have 9 out of the 30 municipalities that we're tracking are positive year over year, and 20 are negative. 1, Taylor, remains the same, neither an increase nor a decrease. Let's take a look at inventory. We are looking at right now 16,546 active listings on the market. 2 days in a row where active inventory has gone up, Friday and Monday. That is normal. We do see this. That's fairly common. We are down 321 active listings from last week. We're down 559 from a month ago. And we are up 13.7% year over year. That number went up a little bit from Friday at 13.5. On the pending side of things, this is where everything changed. First week of September, we saw our first negative 1.5 year over year. That got up all the way to negative 6.1% year over year. We're at negative 5.6% year over year right now. An activity index improved slightly. We're at 18.7% activity index. 18.6 was the reading on Friday. Still a very low activity index reading. We're at 18.7, 5.86 months of inventory, and we have a new record. Take a look at this record. Oh, man. 77 short sale listings currently on the market, and that's going to be a record high. Fairly decent pending, 31 pending, not bad, 28.7% activity index, outperforming new construction, dramatically outperforming resale. On the resale side of things, we're at a 16.35 activity index, new construction, under 25 right now, new construction. And you can see this little bit of an increase on the activity index. The fact that we don't see all short sales and foreclosures here, though, you're absolutely right. Agents are not advertising all short sales. This information is only pulled when, under special listing condition, they actually mark that as a short sale. As a matter of fact, we've even had situations where a team price agent submits an offer, regular property on the MLS, goes under contract, and then the agent's like, hey, by the way, this is a short sale. It's like, wait, what? Number one, you never told me. We don't even have a short sale addenda. And then the agent's like, I didn't know. Like, I had no idea. I was never told this information. Oh, sometimes agent mistakes, sometimes not the agent's mistake. They were simply not told that it was a short sale. So it could really be a very tough situation. In that case, we asked for our option money back. We're like, can you give our option money back? We're not going to just waste $300-$400 on a contract when it's a short sale, and we would have never pursued this property. It all worked out, but it was devastating for obviously the buyers. They fell in love with the property, and then you have to deal with terminating a contract, trying to fight for your earnest money option. Earnest money was fine, but option money, it just wasn't a right situation. Here we've got active listings. We're up 13.7% year over year. Pending listings, we are down 5.6% year over year. Activity index, we are down 13.8% year over year. Months of inventory, we are now up slightly. We're up 12.9% year over year on months of inventory. Is there a way to find out before submitting an offer on a property without calling their mortgage service provider? No, there isn't. Not unless they do a substitution of trustee within public records, or if they actually file a default on public records. And sometimes they don't do that. As a matter of fact, I'd say oftentimes they don't do that. There are a lot of properties out there where it's a short sale. They don't have enough money to cover, especially if they're still making the mortgage payment. That is what we are noticing right now. We're noticing a lot of sellers that are contacting you all, and I'm certainly hearing this in the industry, and the seller's like, I just can no longer make the payment. Can we do a short sale? Like, have you missed a payment? No, I haven't. I've made all my payments, but I cannot make next month's payment. And what is that bank going to say? The bank's going to say, don't care. No, we're not going to process a short sale. You're still making your payments. No, that's going to be the first response from most banks. So that is a short sale potential, but it's certainly not approved. It's not going to show up anywhere. They're not behind on their payments. They're still making their payments. Could it be a short sale? Could it be a default? Could very well be that case. But as of now, there's no way that they can sell the property without it being a short sale. It's either going to be a short sale or it's going to get foreclosed on. They simply owe more than the property is worth. Not $10,000, not $15,000, 30, 40, 50, sometimes 10% of the value, 15% of the value. And there's no way. So do they hunker down and hold on to the property for the next few years, 3, 4, 5 years, or do they miss the next payment and then hope to negotiate a short sale with their lien holder? That's the decision that specific seller has to make. Active listings, we can see here, actives and pendings. Pendings have been going down, very seasonal. Active listings are going down. Also, just the seasonality of real estate. And we can see that we peaked June 30th, 2025 at 18,146. And we are currently down 1,600 active listings simply because of the seasonality of real estate. Let's take a look at price drops. 58.7% of all active listings have had a price drop. Let's take a look at market cycle. This information was also updated first thing this morning. Here's the good news. Number of solds up 6.3% year over year. Number of sold properties. Fantastic. Up 6.3% year over year. We had a really decent July, August. When you look at the pending figures, those are closing in September. So we did record an increase in the month of September, a really healthy year over year increase on the number of sold properties. We crossed 2,500 sold properties in the month of September. Now that pendings are negative, we could very well see in the month of November, it's going to take that 30-day cycle, 60-day cycle for the drop in pendings to materialize through the sold. So we could expect, I do expect, a drop in sold in the month of November. I would say that at best we're going to be flat for October. Maybe we're going to be plus 1 or 2 points, but we will be negative in November when you look at the number of sold properties. Pricing wise, completely different story. Down $35,697 month over month. Not year over year, month over month. 6.1% drop in the average sold price. The median sold price down 5.1%. So what does this tell us about what are buyers looking for? Think about it as vehicles, right? You've got a 6.3% increase in vehicles, but the median average price of the vehicle is down by 6% month over month. They are purchasing less expensive homes. That is what's happening. They're purchasing less expensive homes. But we only had a few closings so far this month. That's why it's not the month of October. That's the month of September. We're closing out the month of September. That's not October. That's the shocking part. That's September. Those are the final numbers for September. It will just adjust by a little bit, maybe $500 plus or minus. But $35,000 drop month over month on a month that is 99% closed out. Man, I was not expecting this. There's no way that I was expecting this. Do you remember what we started this at? Well, here's the good news. We've got access to all this information. Let's go to the Austin Daily Briefing and let's go back to September 8th. Let's take a look at the snapshot for September 8th. That's why I save this as a file so we can go backwards in time. Let's see here. We were 554,000. So September 8th, we were 554,000, and then we ended 550,000. So there's that $4,000 drop from September 8th, now the entire month of September. So we started off on the negative side of things. We ended slightly more on the negative side of things. On the median side, we were at 415. So we actually ended positive on the median. We ended at 417. So the median improved a little bit. The average actually went down a little bit. Let's just take a look at, that was September 8th. Let's take a look at September 3rd really quick. Did I have September 3rd already updated? I might not have had it updated yet. I might only have it for August for this September 3rd. Really early in the month. I usually don't update the month. Yeah, this was only for August. But look, August was up 16,000 and we ended up 14,000. So that backtracked. Then when you look at August, we're at 443 and then that went down to 440. So we had a pullback for the month of August, even though we were already 1 week into September. We had a pullback in the month of August, and that's very normal. We tend to see that. We are positive so far for the month. I just ran some preliminary numbers this morning, and we are positive. We are month over month positive, which is a good thing. In October last year, we were positive both on the average and the median. So far, we are positive. Within the next 2 days, I will add all of the month-to-date closings for October, and then you're going to be able to compare month over month, year over year, and then we will keep on updating those figures as we keep going. I want to see at least 250 sold properties within the 6-county area before I start updating the information. We're 2 days away. As soon as we have more than that 400 or so sold properties, or 250, let's see what we're at right now. We could very well have passed that today, but let's take a look at it. We've got 6-county area closed so far this month. And okay, we're at 215, 216. As soon as this number shows 250, I then get all the information. But let's just take a really quick little sneak peek right here. We're going to click on results. We're going to select everything, go to stats, click on tabular, and we're at 585. 485 on the median sold, 485. So this number is going to shoot up because we're at 417. That's going to go up to 585. But then what's going to happen, it's then going to trickle its way down until we close out the month. So it could very well have a positive October. But the question is it going to be so good that it will actually turn the loss that we had in September into a plus? Too early to tell. It's only the 6th. Too early to tell. We can see that on the average sold price, we are down 19.33%. On the median sold price, we're now down 24.09%. Let's take a look at the percentile analysis. We are going to look at the top 25th versus the bottom 25th percentile. Let's pull this information up. And here we've got the bottom 25th percentile. We are down 2.9% on the price. We're down 3.5% on the price per foot. The top 25th percentile, we're up 2.8% on price. That continues just to blow my mind, doing very well. We're down 1% on the price per foot. One thing that it is interesting, let me go ahead and just pull this up. This is going to be under residential price. I did update this information for the entire area. So this is the latest and greatest. And let's take a look at this really quick. Here we've got the average list price. Peak month, March 2023. This is for the entire MLS. We're down 5.7% from the peak on the average list price. Median price, we're down by 14%. Average sold, we're down by 8.9. Median sold, we're down by 9.6. Average sold price per foot, down 17.6. Median sold price per foot, down 17. But then look at the city of Austin. Really interesting. We are down 7.2% on the average list price, and that's currently at $900,000. And the peak was last month at $970,000. The peak, the average list price for a residential property in the city of Austin peaked last month at $970,000. And we're down 7.2% month over month from peak. The median list price just hit a record high. The median active list price in the city of Austin. So bottom line, real estate has never been so expensive on the available side of things. It just absolutely amazing. Incredible. Well, the median here is down 9, but on the other chart, just 24 on the MLS. That's because this is the entire MLS, not the 6-county area. This is the entire MLS, not the 6-county area. And this is also including October, right? So the previous one, this right here stops in September at 417. This one includes all of the activity in October. Does that make sense? This one includes October. So you've got the Austin area MLS. That includes all 50,000 counties. And then it includes the month of October, as opposed to the previous one, which is the 6-county area, more focused in the market that we actually serve. 95% of all of our deals are in the 6-county area. And then we don't have enough data for October. We're going to cross that 250, and then October is going to be updated. On the city of Austin, take a look, and this is including October. Including October, we are down 15.6% and 17.6% on the median sold price. Just really amazing. Really amazing. Let's take a look really quick on what's happening with rates. Let's take a look at what's happening with rates. Let's pull this up. You can go to resources.teamprice.com, click on mortgage rates. This is going to be the latest and greatest. We are at 6.625. 6.625 on rates. 6.25 on conventional 15-year. 5.875 FHA, good news, still under 6. 6 1/8 VA, 5.875 USDA. Not that we're doing USDA right now. You can't fund USDA loans, so that's not happening right now. The good news so far today is that we did have better than previous auctions for the 6-month and the 3-month. That's really good news. That's fantastic news. We're going to have some pretty significant economic indicators available here. We've got economic optimism. That's going to be published tomorrow as 010. We have consumer credit. That's going to be fairly important. We've got mortgage applications. That happens every Wednesday. Crude oil inventory. That's important. Speaks to the economy. We've got a really important 10-year auction. We've got the FOMC meeting minutes, so now we get to actually read what they said when they met 2 weeks ago. And then on Thursday, we've got a 30-year bond auction that's going to be very, very important. A lot of Fed members are going to be speaking this year. And then on Friday, we have the famous payroll figures. But are we going to get payroll figures if the government's going to is shut down? No. We're not going to get this. None of this right here is going to happen if the government is still shut down. We're not going to get any of this information. What we will get is the University of Michigan consumer sentiment, consumer expectation. We're going to get all of this, but we're not going to get any of this. I think the government is still going to be shut down by Friday. Like I think it's still going to happen personally. Like there's zero progress that's happening. So I think it's still going to be shut down. That's my opinion on it, at least. So we're not going to have any unemployment data that may affect the market. Any questions, you all? It's exactly 11 a.m. and this is going to be your Monday morning touch point, where you are now fully equipped and empowered to go tackle the exciting world of real estate. Any questions, comments, concerns, criticisms, complaints? Want to remind you all, All of the stats are updated on Insight and Statistics. You can get the individual reports right here where you can just go over this information with your clients. These are all the individual reports updated Monday through Friday. If you need the daily briefing, you can go right there to the daily briefing. This is the daily briefing for today. You can download the PDF, have a great conversation with your clients. And then if you want the individual city and zip code data and analysis reports, you go to Market Update, you go to Data and Analysis, and then you can click on any of the top 30 cities, top 75 zip codes, and you've got all of the data and analysis reports. I want to remind you that we do have our Wednesday training, Contract Proficiency Broker Q&A, that is happening Wednesday. We do not have a meeting on Friday. It's going to be your extended holiday weekend because the following Monday is going to be Columbus Day, I heard. So you just take Friday off. You get a 96er. So you get 4 days off. Enjoy your 96-hour time on leave. Enjoy it. So we are not having a meeting on Friday. We are having the meeting on Wednesday, but we are not having the meeting on Friday. If you have not done the contract proficiency for the week, I want to encourage you to go ahead and start doing it. Go to learning, go to contract proficiency, and this is going to be your contract proficiency for this week. It looks very simple, but I need you to read the MLS very carefully because it is not simple. I went out of my way to select a property that has a few issues with it, but a part of our due diligence and our job and responsibility is to be able to look at that property, look at that MLS listing, analyze it carefully, and then structure the offer accordingly. And this listing is going to give you the ability to do this. It is due 9 a.m. on Wednesday, so if you have not started, I want to encourage you to go ahead and get started with your contract proficiency. Since there are no questions, comments, concerns, criticisms, or complaints, thank you all so very much for joining. Super appreciate it. Have an excellent, amazing rest of your day, and I will chat with you later.